Welcome to today's broadcast. Very excited to see you here. Today, big show in store for you, breaking down the numbers behind the newest prediction that Bitcoin ETFs could bring $30 billion into the Bitcoin ecosystem, some big Bitcoin charts to look at, the discussion about, well, what could actually derail the markets right now, some big altcoin news from Ethereum, Solana, Avalanche, and others, as well the newest regulatory news coming out of the USA. So let's go ahead and dive into these topics. Big show in store for you for today. So make sure to leave some comments as I go through here and share these stories with you. Let me know what you think about them. Of course, always curious to hear your thoughts on the news and what is affecting the cryptocurrency markets. Now, the first big story that I want to dive into today, this is a very interesting number to break down for you. $30 billion. $30 billion. Let's take a look at that number, because this is what the New York Digital Investment Group, NYDIG, are saying that they think a Bitcoin ETF approval could bring in a new demand for BTC. Now, I know what you're thinking. $30 billion isn't all that much money. And yeah, in the grand scheme of things, it's not that money. I mean, come on. Apple just hit $3 trillion. This is like 1% of that, right? It's not that much money. It really, really isn't that much money. This is 3% of NVIDIA. When you realize how little money $30 billion is, it actually becomes a very, in my opinion, realistic sentiment. And this is important because $30 billion buys a lot of Bitcoin. A lot of Bitcoin. Remember, the total market cap of Bitcoin right now is $550 billion or something like that. And there's only about 2.2 million Bitcoin available on exchanges. Now, if you take a price of $30,000 per Bitcoin and, well, how many of those do you get for $30 billion? You get about 1 million Bitcoin. Now, what's interesting there is that's about half the supply currently available on exchanges. Interesting. Because $30 billion, again, is not very much money. That's a fraction of a single percentage point of what BlackRock manages, a fraction of a single percentage point of what Fidelity manages, maybe a couple percent of what Invesco manages, if even. We're not talking about huge, huge numbers here at $30 billion. Again, I know it's a big number for the average person, but when you talk about massive investment funds, the economy, all this stuff, the amount of money sloshing around the equity markets right now, it's not that much. I mean, $30 billion, Apple sneezes and the stock goes up by more than $30 billion. And yet that's all the money that would be required right now to buy about half of all the Bitcoin sitting on exchanges. That's crazy. Bitcoin is a powder keg right now. And these are just US Bitcoin ETFs. You got to remember the big picture right now. Brazil already has an ETF. Canada has an ETF. The EU just got a Bitcoin ETF last week. Australia is applying for a Bitcoin ETF. Australian equity market's about the same size as Canadian equity markets. Now, in Canada, we saw about, top of my head number, about 40,000 Bitcoin going into Canadian Bitcoin ETFs. Might be more, might be less. But let's just take that as a measuring stick here. 40,000 Bitcoin in an equity market that's only 2% of the global equity market. The US is 52 to 54%, so 25 times bigger. So I'm not a math doctor here, but if we take 40,000 times 25, that's a lot of Bitcoin. That's 1 million coins. Interesting. Interesting. If we had the same level of demand from US markets as we had in Canadian markets, the math makes sense. The Bitcoin ETFs could suck up 1 million coins. Keep this in mind too, that Grayscale, a one-way investment vehicle, locked up, 600,000 coins or something like that. People got in knowing they may never get out, or it could be a decade before they get their coins out, but they got their money in anyway. So when we have liquid Bitcoin ETFs, spot ETFs, it could really blow the market wide open. So it's very interesting math I wanted to share with you here. Now, let's dive into Bitcoin, its correlation, and what we see happening right now in the wider market scene. So, this is from Ecoin Metrics. They say that Bitcoin is now in uncorrelated territory. It's uncorrelated to the NASDAQ. It's uncorrelated to, well, most major things, right? So, we can see here Ethereum very correlated right now with Bitcoin. Bitcoin mining stocks, Marathon, less correlated. Coinbase, less correlated. The S&P 500, it's pretty damn uncorrelated to that, and so on and so forth, right down to the NASDAQ and all that stuff. So Bitcoin, to some extent, is running on its own juice at this point. It's running on its own narrative at this point. Now, that is relevant for what we're going to talk about here moving forward, because we see a lot of back and forth happening in equity markets right now. We still have a situation where people are very bearish and very bullish at the same time. And the current reality of the market is that the S&P 500 is less than 6% under its all-time high. 2023 has been crazy so far already for markets. We're almost back to new all-time highs for the S&P 500. The NASDAQ is looking pretty similar. These are crazy, crazy numbers. The equity market's gone insane. Now, this is largely a tech-led rally. We got to keep that in mind. This has been led by mega tech companies like NVIDIA, Apple, and others, Microsoft, everyone hopping on the AI trend, and that's been really booming. Tech stocks have dramatically outperformed the rest of the S&P 500 index, and the NASDAQ, of course, is a tech-heavy index already. So we're seeing certain companies moving a lot more than others in this market rally, but nevertheless, we've seen a very big market rally driven by tech. Bitcoin, of course, still 57% under its previous all-time high. I feel like it's 2019 all over again, man. Come on. Come on. That's crazy. If you weren't here in 2019, we saw Bitcoin have a nice little rally, got a lot higher than it did so far. We actually got within 30% of the previous all-time high for Bitcoin in 2019. But during 2019, while Bitcoin struggled a lot, the S&P 500 hit a new all-time high like 3 or 4 times that year. Feeling a bit of a deja vu here. Of course, markets never repeat, but they do rhyme a lot, don't they? We are seeing some very bullish analysts coming out here too. Credit Suisse, for whatever that's worth, for their opinion, they're raising their S&P 500 target to 4,700. We see a lot of big banks coming out, raising their targets, saying no one's being bullish enough. The markets are going to go to new all-time highs. I've seen estimates as high as 5,600 for the S&P 500. Keep in mind, right now we're at 4,500. So Credit Suisse's 4,700 target, it's not that crazy. The 5,600 target and others over 5,000 are very, very bullish, let's say. And the equity markets have hit extreme greed, and they've been in extreme greed for a few weeks now. And before we get into this story a little bit more and dive into the other side of the coin and how this could affect, of course, all markets, just a quick note: if you are a trader, you got yourself an account over on BYBIT, is the best place for trading crypto futures contracts, long or short Bitcoin, or you want to trade a wide variety of altcoins on spot markets. Hop in on their super popular copy trading service. You will find a link down below in the description where you can get signed up for BYBIT, get exclusive fee discounts, and also be eligible for up to $30,000 in deposit and trading bonuses. So go check that out if you are a trader. Now let's get back into this. So while we have some calling for new all-time highs for the S&P 500, we have lots of people taking the other side of the bet. So Piper Sandler's strategist, they see a 20% plunge. So the S&P 500 will fall at least 15% to between 36 to 3,800 by the end of the year. Very, very strong amount of differing opinions here. We see as well active managers. This is a fascinating one from Charlie Bolello. He said active managers had less than 20% exposure to equities last October when the S&P 500 was at 3,500. Today, their equity exposure has jumped above 99% with the S&P 500 above 4,500. This is the highest exposure since November 2021. I keep seeing all of these numbers that are as high as they have been since November 2021 for equity markets. Is that a warning sign for equity markets? We're on the eve of some horrible recession and the market's just going crazy. Market's saying we don't care about a recession. And how long can they not care about a recession? And if they do get a recession, is that the point when Bitcoin starts to correlate again? That would just be our luck, wouldn't it? We don't correlate for this massive run in equities where all this hype's going on. And we've had a decent year for crypto. I got to point that out, but we don't correlate for that, right? And we have a situation where when shit starts hitting the fan again, that's when we correlate again and we go down along with, well, the entire ship. Although it'll be interesting to see if we can have our little recession and not have a horrific market crash. Historically, there's not a lot of precedent for that, but it's not the craziest thing in the world either, considering that modern monetary theory, central bank money printing, all the rest of this stuff is largely disconnected reality from markets. This is just in from the Insider paper. They said U.S. leading indicators point to a recession starting soon. That's according to Reuters. Recession coming soon, but we've been hearing recession coming soon for a long time. At what point is it just Chicken Little saying the sky is falling? The sky is falling. The recession's coming any day now. We've been talking about an imminent recession for a long time. And technically, the US had a recession Q1, Q2 last year in 2022. But that's not how they count recessions anymore. Now we have a situation where, well, it's a recession when we say it's a recession. And actually, a lot of things have been quite strong this year. Job markets have been too strong. That's why the Fed has kept raising interest rates. And yeah, they broke the banking sector, but jobs stayed strong. Equity markets have stayed surprisingly strong. It's pretty interesting to see how resilient the US economy in particular has been throughout all this mess. So look, if we get a big stall in the equity markets, I think all eyes then come on Bitcoin. Is can we stay decorrelated? That is the question. Because if we can stay relatively uncorrelated, then that could mean we could see a correction in equity markets without Bitcoin tanking. However, there's a real risk that they both go down together. We haven't benefited from the rally, but we could have the side effect of getting the hangover from the equity market party that has been going on. So as Mike McGlone points out here, there may be a bigger issue stalling at about $30,000 amid all the hype about the potential for an ETF launch. You got to consider that we're only at 30K, all this ETF madness going on. And where's my price rally, Bitcoin? I know we're up at 30K, but like, come on, Bitcoin, you can do a bit better than that. We have a seemingly unstoppable stock market. So the Bitcoin pause may signal bigger economic issues, according to Mike McGlone. Interesting thought, nevertheless. And here, the market, the Bitcoin Fear and Greed Index. Look at it. It's 50. It's 50. Right there, stuck in the damn middle, isn't it? Every time. That's how it is. Here we go. Market is pretty much just showing what we're all feeling right now is meh. Will it, won't it? We don't know. We're all neutral. Everybody hopes for the bullish upside, and I hope that the analysts who are predicting new all-time highs like 150K by the end of the year, that sounds great. I don't agree, but that sounds great. My thoughts and what I've continued to say, and maybe I'll be completely wrong, but this is my opinion, and I will share it anyway, because that's what we do here. But I still think we could see that 48K rally for Bitcoin by the end of the year, potentially back down to 30K before the Bitcoin halving, and then post Bitcoin halving, we run up into late 2024, early to mid 2025. We watch the indicators. We see for that Pi cycle top indicator to let us know, and other things, you know, the Coinbase apps start trending number one, all that kind of stuff. And then maybe we get to 150K for Bitcoin, maybe a little bit higher, maybe 180K. We shall see, of course. And then you either sell or you lose all your money again. Up to you guys, of course, what you want to do in that situation. But what's interesting is we are still in a value zone here for Bitcoin. You see, this is the 200-day MA multiplier 2-year MA multiplier for Bitcoin. So basically, you see two lines on this chart. You see a red line and a green line. Here's how to really simply understand this chart. When Bitcoin trades under the green line, you buy Bitcoin. When it trades at or above the red line, you consider taking profits. Right now, and for, the last year, maybe even a bit longer, we have been trading under the green line, meaning that Bitcoin currently is in a value buy zone. So for the value investors out there who've been dollar cost averaging in through this bear market, those purchases will likely stand the test of time quite well. And I know with dollar cost averaging, you could have been buying from the 69K top all the way down, and you're actually in profits right now because that is the power of dollar cost averaging. But if you had been, for example, buying a little every week, and then when we cross under and start hitting this deeper value zone, add perhaps more per week, you'd be even further ahead. I'm still stacking sats. Let me know if you are still stacking sats as well. I also want to share this one with you here. It's from Will Clement. Bitcoin is no longer in a period of capitulation. Bitcoin is no longer in a period of capitulation. So this is the net realized profit and loss adjusted for market cap. You can see we have once again, just barely, with the tiniest bit, we have just entered into the new green cycle. It's been in effect for a few days now. You can see in previous cycles, we've had those massive red bear market areas. We exited that probably 4 to 6 weeks ago, something like that. And now we are post-capitulation period. So there's a lot of charts, a lot of indicators, a lot of different things that are basically showing the same thing. And of course, everything can be derailed by a US recession, an equity market collapse, and all that stuff. Indicators only tell you so much. You still have to factor in macroeconomics and all that kind of stuff that's going on. But a lot of indicators have been showing that, if you've been buying Bitcoin, you've probably been doing pretty okay during all of this time, and keep stacking, basically, because we could be on the verge of something big happening in the market. This is from the Rational Root. This is Bitcoin right on track in the cycle. So this is days until the halving scaled by realized price. So we're about 280 days out from the halving right now. And we can see previously what has the price action done during these times, right? So we get the cycle bottoms when our cycle bottom this time largely aligned with when previous cycle bottoms came in the cycle, the 4-year cycle for Bitcoin, still maintaining surprising relevance. So what happens over the next 10 months or so while we're waiting for the next Bitcoin halving? Who knows? But we can speculate what happens after the Bitcoin halving, because historically we have a lot of evidence for what has happened. Once the Bitcoin halving happens, we have a situation where even if demand stays the same, the price is going to rise because there's only half as much Bitcoin entering the market every single day. For miners, drop from 900 down to 450, except we're not seeing demand staying the same. We've seen massive stacking over this period by small users. Again, it's such a big number, so I keep sharing it, is that regular retail users are outstripping the daily production with their demand by 3 times. That's not BlackRock. That's not Fidelity. That's not Invesco. That's not any of these other big players, not MicroStrategy. It's none of these guys. It's just regular Joe Blows buying Bitcoin. They have 3 times the daily demand than the miners can currently produce. When all the other institutions come in and they bring the 30 billion bucks in with them, whoa, watch out. Watch out. That's what I got to say. Right now, Bitcoin's under $30,000. Ethereum's under $1,900 at the time of recording, of course. And my guess is that if you fast forward 18 months, late 2024, maybe we talk about early to mid 2025, you're going to start seeing all those posts that, I wish I had bought Bitcoin, I would cut my nuts off right now to buy Bitcoin again under $30,000. But that chance will have passed the market by, which is why I have been stacking all year. Now let's move on to our next topic here. This is some crazy, crazy altcoin news that I have for you. And I want to start with some really big, pretty wild Ethereum news, but I've also got some Solana news. We've got some Oasis Network news, some Avalanche news, some Aptos news. So strap in. It's going to be a good time. Let's get in with this story because this is crazy. This has been shared by Look On Chain, but a lot of people have been talking about it. So an Ethereum ICO participant, they woke up after 8 years of dormancy and deposited all of their 61,216 Ethereum to the Kraken exchange. Holy cow. Who, why, what? I don't understand. Who are these people out there? Really? I mean, really? Who are these people out there that can let $116 million worth of Ethereum just sit there for 8 years and you literally do nothing with it. You do nothing with it. That, by the way, would have been worth about $250 million at the peak of the bull run. Of course, you have also not staked it during all this time. I mean, man, 61,000 Ethereum, that's going to get you some pretty sweet staking rewards. Why didn't you stake it at all, ever? Maybe you're waiting for the upgrade. Why aren't you staking it now? Kraken's not the place to stake it. They don't allow staking anymore because remember, the SEC told Kraken, you are not allowed to help people stake their coins. Bad Kraken. Don't help people make money. I am blown away every time we see one of these stories, and they come up every few months, but every time we see one of these stories, I don't know what to do with myself. I mean, who the heck does this? How much money do you have to not care about $100 million sitting there? I mean, come on. Even if you have $1 billion, this is still like 10% of your net worth. You don't do anything with it. You let it go to $250 million and you're like, whatever. What? That's crazy. Let me know. What do you think happened? Maybe something happened. Maybe this guy was in a coma. He got in a boating accident. He was in a coma. He woke up and boom. It's like winning the lottery, man. Maybe he was in jail. Maybe there's a dark side to this story. Or maybe they're just looking through their shoebox one day like, oh, I remember that. Whoops. Oh, I guess I should go cash that in. Dude, I love it. These stories are crazy. I want to share this chart here from Patrick Dynamo. So this is Ethereum mainnet versus layer 2 transactions over time. Now, what we are seeing is truly impressive because it's really showing the value proposition for Ethereum layer 2s. So Ethereum, the main net, has basically been seeing between 800,000 to 1 million transactions per day for, well, basically ever. But what we've seen happen is that since a year and a half, 2 years ago, we had all these layer 2 networks starting to launch. And slowly but surely, we saw the number of transactions increasing until about 6 to 12 months ago, we saw these combined, especially if you take Arbitrum and Optimism, put all these different layer 2 networks together, what we have seen is basically Ethereum layer 2s dramatically doing more transactions than layer 1. Now, currently, we're about 3x the main net activity. We're not in a bull run right now. I mean, well, we're at the earliest stages of bull run. We're not like a bull run mania right now. When we're going to see these numbers go absolutely parabolic because the reality is that we're still a long way from Ethereum main chain fixing its issues. When the bull run really gets heated up and going crazy, I'm looking forward to paying $150 or $200 to make a swap on Uniswap again. Great. Meanwhile, over on layer 2 land, you're going to be paying pennies. And we have EIP 4844, which is coming out later this year for Ethereum. That is going to potentially lower gas fees for these Ethereum layer 2 networks like Arbitrum and Optimism, Linea, Base, Mantle, all the big ones, ZK Sync, 10 other ones that are out there. it's going to lower their gas fees by 100x or up to 100x. They think it's going to lower the gas fees by. So I went to do a transaction on Arbitrum on Uniswap the other day. It would have cost me $15 on Ethereum, but it would have only cost me 24 cents on the Arbitrum network. Now, if we lower that by 10x, it's only 2.5 cents. You lower that by 100x, a quarter of a penny. Now, we're not certain if that's going to be immediate or if that's going to take a while to roll out, or if we'll even get that 100x, maybe we only get 50x or 20x. But I'll tell you what, using Ethereum layer 2s is going to be completely insane. So I'm very, very excited to see that layer 2s are taking on. In fact, I do a lot of stuff on layer 2s these days. I only do what I have to on Ethereum layer 1, but if I can, I do it on Arbitrum. That's the one I use the most, but I've been playing around with ZK Sync. I did some stuff on Linea yesterday, which is Consensus's new Ethereum layer 2 network. Hopefully positioning myself for some sweet airdrops there in the future, of course. Keep an eye out for those. And hey, big news from Solana, guys. Solana has had 100% uptime since February. You go, Solana. Keep it classy, man. I love it. Solana's been up, man. It's been working. That's a celebration right there. Of course, Solana famously has had a lot of downtime, and network's gone offline like 16 times and had to be like, flip the switch on and off a few times, unplug it, plug it back in. You know how it goes with Solana sometimes, but hopefully they're actually, okay, jokes aside, I hope that they're really working the kinks out. I see a lot of interest remaining in Solana. When FTX collapsed, we were all calling for the end of Solana. It's over for Solana without FTX's money to pump up their ecosystem. Can they survive? Yeah. Well, Solana's still here. Uptime since February. It's like a new record, I guess. Anyway, but it's interesting to see that we still do see people showing up to use applications on the Solana network, but Solana really has a lot of proving to do for itself because there are so many well-funded competitors out there that want a piece of that tasty, tasty Solana pie. Competitors like Aptos. Aptos new user growth hits 900% after integration with social media app Chingari. Now, Chingari, in case you're not familiar, it's like India's TikTok, basically. They've got a crypto app and crypto tokens and all that jazz too. So that's on Aptos now. They didn't go to Solana for one reason or another. I mean, hey, did anybody tell these guys Solana's had no breakdown since February? Come on. No, all jokes aside, lots of love. Hope Solana investors make bank, obviously. By the way, if you are investing in this crypto space, I highly recommend that you sign up to the Wealth Mastery newsletter, especially if you're not yet. You got to go check it out. It's free, comes to your inbox 3 times a week. I mean, the work that me and my team put into these newsletters to pack them full of alpha, it's insane. We have altcoin news, DeFi news, NFT news, technical analysis, much more. Airdrops. I mean, we've nailed a lot of airdrops in the past year. If you'd gone with the premium, which by the way, we're doing a 33% off for a 6-month premium, which also includes our Bitcoin course for free. If you get that 6-month premium subscription, it's $147 value for the Bitcoin course, and you get 33% off of a 6-month premium subscription. But had you been following some of our airdrops over the last 6 to 12 months, thousands of dollars you would have made. Thousands of dollars. Absolutely crazy. Most recent one was Maverick. That was, $6,000 or $8,000 for some people. Some people got big paychecks off of that one. And of course, we're always implementing new strategies, bringing out new things. We covered at length the Arbitrum airdrop as well. And look, that's just on the premium side. Premium side, we go much more in depth, a lot more airdrop opportunities. If you just want to sign up for the free version of the newsletter, you're very welcome. We'd love to see you there as well, because we also share the hottest airdrop opportunity every single week for free with our free subscribers. So guys, check it out. We got over 75,000 people on the list reading this every week. So check it out using the link in the description. Okay. That's the newsletter. Check it out, guys. It's awesome. Now let's talk about Oasis, the Rose token. This is one I bought a lot of throughout the bear market. Come on, daddy needs a new pair of shoes. Let's get it, Oasis. Yeah. Anyway, I have been buying a lot of this coin, and I hope that they have a good run in the coming cycle. They've been doing a lot of stuff. We covered the other day how they got a new big hire for their marketing leads. I hope that helps turn things around a little bit for them. But they also just had this. So Oasis launches Ethereum compatible privacy blockchain Sapphire. That is very, very cool. The Oasis privacy layer enables developers to add instant privacy to any dApp on any Ethereum virtual machine compatible chain. That's all layer twos. That's all layer twos. Arbitrum, Optimism, Mantle, ZK Link. That's Avalanche. That's Polygon, and like a bunch of other stuff. Very, very interesting. This makes the Oasis privacy layer a potentially very important piece of blockchain technology that everyone gets to benefit from, because it brings that privacy right across chain. So it says harness the power of smart privacy while preserving the entire user experience on the home chain. No cross-chain swaps needed. Which, if you've done cross-chain swaps, you know how crazy it can be. It can be expensive. It can be dangerous. Bridges are notoriously dangerous and get hacked, seems, all the damn time. So this is a big move forward for the entire crypto space, and I'm very excited about that for all of crypto, but also for my rose bags. So may they pump to high heavens. Also, over in Avalanche land, I want to share this with you because Avalanche has just been slaying it throughout this market cycle. So we have here monthly active users on Avalanche. They have reached nearly 3 million active users in just the first few weeks of July. The Avalanche ecosystem witnessed an all-time high in active users. This is crazy stuff because Avalanche, great blockchain, solid tokenomics, all that kind of stuff. A lot of developers, a lot of builders. Their subnet technology is very interesting, has a big potential, I think, for scalability for the Avalanche ecosystem, but also potential moon juice economics for the AVAX token. But here we go. The users are showing up. And again, I got to stress, this is like exiting the worst of the bear market, start of a new bullish wave in the market cycle, but a point where we still have lots of volatility, where nobody really believes this is a new part of the cycle. We have a new all-time high for on-chain users for this blockchain. This cycle is just so unlike 2019 in the way that people have stuck around. I know there's a lot of parallels in terms of the charts and all these different things and our correlation with the equity markets, all that jazz. But when you actually look at like what's happening on chain, the developers, the new protocols being launched, and people literally just showing up on chain and using stuff, that blows my mind. I love it because we have never had a bull run in crypto with so many active users. Literally more active users right now on Avalanche than the height of the bull run. More users on Ethereum layer 2s than the height of the bull run. More users across all chains than the height of the bull run. It's fascinating the prices aren't higher right now. Now, I want to change conversations here for a minute because right now we're seeing some big things happen on the regulatory scene with crypto. Gotta get into the nerdy stuff here for a minute, the regulations and all that stuff. We're seeing very different approaches globally, how things are being regulated. And I also want to talk a little bit about the US presidential candidates and their stances on Bitcoin, because for the first time, really, Bitcoin has become a presidential issue. It's an issue in the US presidential campaigns. And while the current president may not even really know what Bitcoin is, although he certainly, his banking handlers have told him what to think about it, but we are seeing some of the new candidates actually saying some pretty interesting stuff and making some pretty interesting proposals. I have no idea if any of these people are going to get anywhere close to the halls of power, if the deep state and the elites will actually allow that to happen. But the fact they're talking about it is very interesting. So I want to talk about that with you. But let's start off with this story. NASDAQ CEO, now is not the right time for crypto custodian services. If not now, then when, NASDAQ? Come on, man. Look, he said the opportunity changed over the last several months, and then the regulatory overlay and kind of overhang changed. Basically, the NASDAQ was going to launch the crypto custodian service. Everybody got very excited about that because NASDAQ's obviously a super damn big deal when it comes to, well, markets in general. And then the SEC came along and said, well, basically everything's a security and all exchanges suck and nothing can be trusted. And we're going after everybody. Anybody who touches crypto at all, we're going to crush you and go after you, et cetera, et cetera, et cetera. Here we go. Here's the effect of that. NASDAQ, one of the biggest financial companies in the United States, saying, we're going to stay away from crypto right now because we just don't have the kind of clarity that we would like to see. It's a story that you're going to see a lot. Meanwhile, over in France, a completely different story is playing out. Société Générale, one of the world's biggest bank in France, one of the world's mega banks, they obtained a crypto license in France. So this allows the company, because France, unlike the USA, by the way, passed regulatory clarity. They made a clear set of rules and said, this is what you can do, this is what you can't do, this is how it's taxed, et cetera, et cetera. So Société Générale said, oh, we like that. We're going to go and apply for a license. And so now this giant French bank can custody crypto for their customers and sell crypto to their customers. That is the power of regulation, positive regulation that encourages, doesn't destroy an industry. The USA could learn a lot from this, but we have this one regulatory body, the SEC, who is being pushed forward by a very anti-crypto White House. And that is making the USA's crypto scene be pretty damn bad. Whereas other countries like France are saying, you know what, we're going to take the business. We'll regulate. We'll be an early mover in this space. We'll take that money. And that's what they're doing. Then some countries like Kuwait, this is a pretty surprising one, and I feel like pretty out of step with what we're seeing in the Gulf region and the Middle East right now. Kuwait banned crypto and virtual asset transactions. An absolute prohibition of all crypto operations in the country. Completely out of step with what they are seeing in the UAE, Bahrain, other places are taking much more positive steps. Kuwait's banning it, and that's never worked before, and I don't know why. Little old Kuwait thinks they're going to ban crypto. Okay, guys, good luck with that. China couldn't do it. I'm not going to hold my breath thinking that Kuwait's going to have any kind of grand success on stopping people in their country from accessing cryptocurrencies. I mean, come on. Rich Kuwaitis are just going to hop on a plane, fly to Dubai with a suitcase full of cash, and buy Bitcoin if they want to. Just like people in mainland China get on the train, go to Hong Kong with a suitcase full of cash and buy Bitcoin at brick and mortar stores. It's been happening for a while. Meanwhile, Dubai got another massive cryptocurrency exchange to onshore. Crypto exchange BitGet opens Dubai office, joining, of course, others like Coinbase and Binance and most of the other big cryptocurrency exchanges, because surprise, surprise, when you pass common sense, forward-thinking legislation and invite businesses to come and register in your country, they do it. Crazy, I know. We also see this, Britain rejecting calls to regulate crypto as gambling. So some anti-crypto parliamentarians were trying to push forward, well, crypto is basically just gambling. It's the same as going to the casino and pressing the buttons. I know some meme coins and some of our altcoins may feel like that sometimes, but it's not the case. It's not the case. You could argue that it's, hey, gambling, investing in some of these tech stocks is gambling, investing in some of these, I don't know, any stocks. Banking stocks, that's a gamble. Come on. Everything has risk, of course. But this has been rejected because Britain has put forward the plan. Hey, we want to be leaders in the digital asset space. We want to make the UK a global hub for crypto. And they're probably going to do it. London's already a global banking hub. It would seem silly to miss out on the financial opportunity offered by catering to the crypto industry. Some countries can see it, others cannot. SEC Chair Gensler over in the USA says the Wild West of crypto. He's got to get it. He's the sheriff, and he's coming to clean up all these dirty, dirty cowboys. He's asking for another more than $100 million to go after crypto companies. Because spending, what did they spend fighting with Ripple in court? $200 million on legal fees? Your taxpayer money down the drain. It would have been more fun to just light it on fire. At least everybody could have had a good time watching that money burn. Nope, Gary would like to burn up some more money. He would like to lose some more cases in court, because I imagine that a lot of these crypto companies, not just Ripple, are going to fight the assertion that they are securities. Cardano, Solana, others, they're going to come out and say, you know what? I mean, we've already seen Cardano saying, well, we're not security. That's ridiculous. And I could see more lawsuits coming forward. And if XRP is not a security, then Cardano sure as heck ain't a security, nor is Solana or a lot of these other ones. There you go. They're going to throw some more of your money away, guys. I hope you like it. Hopefully, though, at some point, we will get some actual regulation in the United States. It might take a while, but hopefully we get it. So U.S. House Republicans introduced crypto oversight bill with changes from their June draft. So basically, they have been trying to establish, well, what can the SEC regulate? What's the CFTC going to regulate? Most cryptos probably going to fall under the Commodities Futures Trading Commission, not the SEC, which basically is really good for crypto because it means that crypto will have much lighter touch. Securities are much more stringent. Commodities are a lot less stringent. Let's just simply put it like that. So it'd be good to see this happen. However, I will not be holding my breath on this, because the reality is that there is a Democratic president sitting in the White House, and that guy does not like cryptocurrencies. His White House put Operation Choke Point 2.0 forward, which sought to limit as much as possible on and off ramps into the cryptocurrency industry. That administration has also empowered the how can we say this gently about the SEC? Well, let's not even go there. I don't have anything nice to say about the SEC. Let's just put it that way. Those SOBs over at the SEC, they have been empowered by the current White House administration. So I am not particularly hopeful that we're going to see a crypto oversight bill pass in this current administration. It would be nice if they did, but I am skeptical. Let's just put it that way. But I'm happy there are people trying. At the very least, there are people out there signaling that, hey, we do care about this. We understand the potential for this industry to bring massive tax revenue and jobs and all this stuff in. I mean, the amount of jobs alone that the USA is going to lose by pushing the crypto industry out of the country, I don't even get it. It's so backward thinking. But then again, the guy who's running the country is like 86 or something, so I'm not surprised. Just got to turn on the record player, man. Listen to the sounds. Okay. RFK Jr. is vowing to back the US dollar with Bitcoin if elected president. I think it was like 1%. That's not going to happen. You can say a lot of stuff on the campaign trail, but man, they've overthrown countries and murdered all kinds of people around the world who challenged the dollar's supremacy. Yeah, you ain't going to back the dollar with Bitcoin, man. They will not allow that. The president is not so almighty and powerful, of course. But I like that at least RFK Jr. is saying the things we want to hear. I'm all about that. That's cool, man. Also, more importantly, and this could actually be something that could realistically happen, and although I'd love to see the US dollar backed by Bitcoin, I would not hold my breath on that one. But one thing that could be to make Bitcoin profits exempt from capital gains tax. That would be pretty cool, because this is what is stopping wider cryptocurrency adoption, particularly in the USA, because when you want to buy something with Bitcoin, it's a freaking taxable event, man. At the very least, you could say, hey, look, any transaction under $500 or $1,000, you can go out and you can buy lunch, a bottle of wine, coffee, something small. You can go shopping and buy a couple shirts or a new pair of shoes or something like that and use your Bitcoin to do it and incentivize merchants to accept it by taking that capital gains tax away from Bitcoin. Then Bitcoin can be more like real money, less of an investment that you can spend, because that's the way the tax system kind of treats it right now. I mean, you can use Bitcoin like money. I've used Bitcoin like money before, but it's a freaking taxable event when you do, which is annoying. So that would be cool if such a thing were to pass, if this guy ends up actually getting elected. But hey, it's pretty long shot for anybody to take out the incumbent in their own damn party. You also have other candidates, GOP presidential candidate Vivek Ramaswamy. He is saying that he would roll back tax restrictions on mining cryptocurrency in the USA. So he's been a generally pro-crypto candidate as well. So I'm just pretty excited. Look, regardless of who gets elected or what they end up actually doing, campaign trail promises versus reality, you guys know how that usually plays out. I'm just excited to see that now US presidential candidates have opinions on Bitcoin. They get asked about Bitcoin. Hey, what's your stance on Bitcoin? The conversation's moving forward. The zeitgeist of Bitcoin continues to grow. Pandora has been let out of the box, and she's well, no, Pandora was not in the box. Pandora has let chaos out of the box, and chaos is not going back in. So it's pretty damn exciting to see all of these things happening. And at some point, the US will get regulatory clarity. When that happens, strap on your boots, because it'll get pretty crazy pretty quickly. Now, let's open up the floor. We're going to take 10 minutes or so, answer some of your questions. So please, if you do have some questions you'd like to have me answer, I'll stick around on the stream here for another 10 minutes or so. Dive into some questions with you guys. Curious as always to see, well, what you have to say, what's on your mind right now. So do let me know what questions you might have. First question here from Greg. Let's hop in on that one. Greg, what do you got for me here? Hi, Lark. Hope you and yours are well. Thank you very much. What are your thoughts on Fetch AI? Well, that's a good question. I have not looked at Fetch AI in a long time in any serious way, but I think that the AI narrative is not going anywhere, in that if you can get real value capture from a token in the AI space, and I don't know if Fetch is doing this. I'm not an expert on their tokenomics by any means, so don't quote me here. But I'm just saying that in general, if you can get an AI token that has real value capture in the fluffy crap governance token, right, that doesn't really capture any value, that can still pump on narrative. Be clear. Governance tokens or tokens without strong value capture can pump simply because they have AI in their names. So there you go. But I would not fade the AI trend. I think it's going to be massive for equities. It's going to be massive in crypto as well, because we see crypto companies actually doing some real stuff in the AI space. So I'm pretty excited about that. Okay, what do we got next? Oh, that's a good one. 2020 Enlighten. How much did you invest when you first started in crypto? Well, it was basically all I had at the time. Let's put it that way. But not much. I started my first crypto purchase, which was kind of like the money that I had at the time. What was it? It was like not much, maybe $2,500 or something worth of Bitcoin. And then, I lost half of that in a very short amount of time, gambling. Sorry, we don't gamble in crypto. The UK is not correct. We do not gamble in crypto. Investing in altcoins, having no idea what I was doing, jumping from one to the other and quickly losing a bunch of money. But it was a good time. It was a good learning experience, nevertheless. But yeah, didn't bring a lot of money in to start, a few $1,000. I would have got here. Harsh 458. Hey, Lark, do you think 18 months after halving is the best time to sell as it's closer to the all-time high? Harsh 458. It's not about specific time. You can't just look and say, okay, it's been 18 months since the halving. Now I have to sell. It's a little more complicated than that. You have to look at the sentiment, because we might get our all-time high 6 months after the halving, 3 months after the halving. If we get a Bitcoin, you don't know. Yes, so you have to watch for all these different indicators. How is the sentiment looking? Have we been at extreme greed for a while? Are we seeing, the top 5 apps being downloaded globally as crypto apps right now. What else are we seeing? Are we seeing indicators saying, hey, things are massively oversold on like the monthly charts overbought on the monthly charts? These are the kind of indicators we're going to look for. It's not just a simple time thing. You can't just say, hey, set my clock for 18 months and then wait. You got to look at other things, but you have to understand that as we start going through that cycle, you got to start looking around, So if we're 12 months or 18 months in and we haven't quite got to that blow off top moment, well, you really need to start digging in and say, okay, what are the indicators telling me? What are the technicals telling me? What do I see in the charts here? What's the sentiment like right now? That is, I think, a much more useful indicator. What do we got here? We got a super chat. Lark, what do you think about layer 2 cryptos like BitRock? I've literally never heard of BitRock. Thank you for the super chat, but never heard of BitRock, so I have no opinion on it. I'm bullish on the layer 2 space, but have not heard of BitRock or know anything about it. So there you go. Gary, looking at Rose as well. Do you stake or just hold or both? I am currently staking 100% of my Rose. Oh, Gary Guzzler. Oh, I see. I like that. Gary Guzzler with a little picture of Gary Gensler as the crypto sheriff in the Wild West. Okay, I dig it. That's funny. All right. But yeah, I am staking all of my Rose. Have been for a while. I got a bit lazy. I had some of it sitting on Binance for a while and finally took it off and staked it as well. So it's 100% of my Rose is currently being staked and just waiting, waiting for the markets to get better, for the price to start going up. And when the price starts moving, and I don't know, let's say we get over 50 cents or something like that, I might start thinking about, okay, I need to unstake this because there's a wait period for unstaking. So I need to unstake it and start thinking about, okay, when can I sell my Rose? Because I will sell it. I'm not married to that bag. It will be sold for cash, and I'll love it. I will be thanking Rose for a long time for that. Just like I love Cardano. You guys know I love my Cardano around here. Made some crazy cash off that. It was great. Okay, where are we up to? Jim Junkie Crypto. Lark, were you poor before investing in crypto? Yeah, absolutely. Crypto completely changed my life, man. Crypto has been an amazing, amazing ride, without a doubt. And I think that's the power of crypto. The ability to come in with very little startup capital and be able to have outsized gains in this market. I mean, that is the promise of cryptocurrency. The ability to come in here and say, hey, I can make it big in this market. If you put in the time, you hustle, you figure out how to shake the market until money starts falling out of it. So there you go. If you don't have a lot of startup capital, realize that the vast majority of people who got invested in crypto came from nothing. But that's the story of people getting rich overall. 77% of millionaires came from nothing. You have to remember that. People who are already rich, or they're a family office, their dad's rich. I got a little loan from my dad for $10 million and I bought Bitcoin during the bear market. I made a bunch of money. Those people are not the normal situation. The normal situation is regular people just like you and me making it big time. That's why meme coins remain so damn attractive, because they offer that almost gambling lottery-like sensation of winning a big overnight. Not that I'm a proponent of meme coins. I think there's better investments to make in real solid technology as doing cool crap, and some more speculative stuff as well, obviously. So there's that too. Cano Kingdom, what do we got here? How much is Chainlink influenced by BTC and ETH? Well, right now, obviously, there's a lot of hype around Chainlink because of the recent announcements around the CCIP upgrade. So that's really, really big. But when that hype cools off a little bit, we'll see again BTC and ETH. They really lead the entire market. And we have narratives that pop out from time to time, but it's hard for a broader rally to happen in altcoins, or for one altcoin to have a really sustained, like crazy move without the broader market support. And what BTC and ETH indicate is what's the broader market doing. So we can see any altcoin go on a crazy run on its own when Bitcoin and Ethereum aren't doing that much. But if Bitcoin and Ethereum start crashing, it's hard for altcoins to have any kind of run. What do we got here? Hi, Lark, longtime fan. I stayed up late to make it here. So answer my question, please. Hello. Hello, Pew Pew Boom 2. Should us Joe holders be worried about AVAX and C Chain on Uniswap now? Well, I mean, competition's always out there. And certainly, this, as someone who also holds a big bag of Trader Joe, it's definitely something I think about is, can they maintain with the competition? And I think Uniswap's innovating all the time. Uniswap just launched their V4. They launched on Avalanche, which, of course, what you're concerned about here, and that's fair enough. And they launched Uniswap X the other day. So Uniswap's definitely doing stuff. They're doing a lot of stuff. Yeah, Uniswap's very well funded. They've got a lot of innovators. They have a smart team. But so does Trader Joe. And the Trader Joe token is everything that the Uniswap token was supposed to be. You see, the reason I don't hold Uniswap, I would have gone so deep into Uniswap had they ever flipped the damn fee switch on. Because why wouldn't you? Man, that would just be such a big damn moneymaker. Trader Joe actually has that. Now, Trader Joe, of course, is not Uniswap. They don't have the market share that Uniswap has. But if they can, say, get, I don't know, 5 or 10% of market share on some chains, that's valuable. So we shall see. I'm not particularly worried about it, but then Joe's only like 2.5% of my portfolio. So if it goes to zero, I will be disappointed and sad because I like Trader Joe, but it won't end me. So there you go. I'm not particularly worried about it though at the moment, but just my opinion. Crypto Duck, Lark, been subscribed since 2017. Will you ever bring back the cartoon intro? We should just play that one time, one of these days, just for fun again, because that was hilarious. That was some money well spent getting that cartoon intro done back in the day. Let me see. We got time for 2 or 3 more questions here, and then we're going to finish up. Matthew Millar asks why regulatory clarity is no more beneficial for freedom of money to be regulated than it is beneficial for freedom of speech. Well, Matthew, the reality is that regulation is going to come, and regulation is keeping a flood of money from coming in. So look, it's a double-edged sword, and I've always said that regulation is a double-edged sword. But regulation is going to come, and the kind of regulation that you want is positive regulation, like we're seeing coming out of the UAE, like we're seeing coming out of France, and other places. What you don't want is what's happening in the USA, where they're back and forth and they're refusing to pass laws and they're just suing everybody. That's toxic environment for business, right? You get developers leaving, you get stifled capital markets. You have a situation where instead of having all these ETF products, where eventually you're going to have Bitcoin ETFs and Ethereum ETFs and Polkadot ETFs and Cardano ETFs and all this kind of stuff, that brings a lot of money in. That gives people more options because you're never going to get 401k accounts to have broad adoption of cryptocurrencies, for example, without regulatory clarity. You're not going to get big basket ETF products buying up lots of crypto without more regulatory clarity, so on and so forth. Again, double-edged sword. It can get real bad with regulation, but positive regulation has the ability to prop the industry up and move it in a good direction. It's like putting wind in the sails of an industry. But yeah, regulation, it's always problematic. Let's do 2 more questions, and then we are going to finish for today. What do we got here? What are your thoughts about the current BTC dominance pullback? Is it short term? I think BTC dominance, personal opinion, haven't looked at the chart, but just my personal opinion on it. Bitcoin dominance, when we see more rumors around the Bitcoin ETF, or should we actually see a Bitcoin ETF approval, is going to skyrocket because it'll hit the FOMO moment for Bitcoin. And that could push us up towards the eventual buy the rumors, sell the news. Bitcoin ETF actually hits the market. Prices kind of go meh. General thought. But Bitcoin dominance, I think, over time will never go back up to like 90%. I know there's some Bitcoin maximalists who go back to 90%. All the altcoins are going to die. That's not going to happen. It's not going to happen. Over time, Bitcoin dominance will probably slowly trend down. So I try not to think too much about Bitcoin dominance. We talk about it from time to time because it is kind of an interesting metric. But at the end of the day, it's not super relevant in terms of, well, what's actually going on in the markets. I find it much more compelling to look at the Bitcoin price charts because it tells you a lot more information. Okay, last question here. What do we got? Here we go. Question about little pause. What best prediction do you see for Moonbeam in a bull run top? I don't have a price prediction per se. I think that right now, what we need to see with Moonbeam is for it to really start catching some adoption because it hasn't quite got there yet. And we've seen some definite uptick in the past few months. Last time I looked at some Moonbeam adoption charts in terms of transactions and stuff like that, we have seen an uptick compared to where we were in the depths of the bear market. So that's encouraging. But what Moonbeam needs is lots of users, lots of applications, some kind of excitement and hype and narrative building around the chain. And I've got a big bag of Moonbeam, so I hope that happens. I'm here for the narrative for, Moonbeam, the Ethereum of Polkadot, right? Big backers, solid looking platform. So price predictions until we see that real sort of momentum build behind it. I don't know. We'll see. We'll see. I think you need to have a lot of other factors coming in here that will really determine how the price is going to go for Moonbeam in the bull market. And we're at such an early stage for it in a lot of ways still that I don't have a particular price prediction per se. Whereas for other coins, I'm like, oh yeah, that's a potential because I can see the path of where it's going, adoption and on-chain data and all that kind of stuff. Moonbeam, I think I need to see some more. And I'm okay. That's it for today. Thank you very much for joining me in this conversation. Of course, thank you very much to everyone who joined live today in that conversation. And of course, if you want to listen to this again, you can always listen over on Spotify and Apple Podcasts. We place this there as a podcast as well. So you can find it over there as the Wealth Mastery Podcast or Lark Davis Podcast. Anyway, find us over there. I'll put a link in the description for the podcast where you can find us. So go and check that out if you want to listen to this podcast in the future. It won't be live on the podcast, but if you want to listen to these streams in your car when you're driving to work, you can do that. Thank you very much, and we will see you next time.